Welcome to the Mortgage Mindset Podcast, where
we talk about all things mortgage.
So we're looking at a program that not only would allow you to get into a house with zero down payment, but also would allow for all of the fees that are normally associated with that transaction to possibly be wiped away.
Yep, that's right. So down payment would be covered, closing costs covered, and possibly you walk out with a check.
So Dekovan, a lot of people are struggling with trying to find a way into their first home or into their first investment home after they already have their home. And it's that down payment that's scaring off a lot of people, that chunk of money that they have to come up with first. So today, we can talk a little bit about some of the options that are available. So what is available for somebody in the way of down payment assistance?
Yeah, so that's a really good question. And first off, a lot of people think that you have to put down 20% in order to buy a home. And that's not the truth, right? So you can actually qualify to purchase a home with less than 20% down. And there's different types of loans that require different amounts for your down payment. So that's the first thing that people need to be aware.
That's important, I think, because the reality is that most people are under the impression that I have to have a certain amount of money. So for every $100,000, I got to have $20,000. And that's a lot for somebody to save. And if they're not a saver, if they don't have that, then most people don't even begin to dream about having their own home.
Yeah, true. Like, I mean, if you think you have to have all that money, it's going to stop you from even trying to move forward at all.
So that's really important to just kind of start with that mindset that there is a way to get into a home.
Yeah, sure thing.
I think that's really what the Mortgage Mindset Podcast is really all about, is to just adjust our mindset to think in terms of what is really available for mortgages.
Yeah, that's right. That's right. So
which product, when it comes to down payment assistance, which is the first one you want to tell us about?
So to give everybody just an idea or an overview, each loan type requires a different amount down, a minimum amount. So when it comes to, let's talk about FHA loans, right? So you don't have to have 20% down. The minimum down payment on an FHA loan, before you even talk about down payment assistance, is 3.5%. Okay. Right. So easy math, if we're talking about, $100,000 for a purchase price, then your 3.5%, $3,500 is how much you need.
Okay.
For your down payment.
That's not bad. All right.
Mm-hmm. So second option is going to be a conventional loan. And conventional loans vary a little bit depending on how much money the person makes. So the down payment on a conventional loan can be between 3 to 5% as a minimum down payment. So again, easy math, $100,000, you're looking at $3,000 to $5,000 as your down payment, or ultimately really 3% to 5% minimum for your down payment on a conventional loan.
Okay. So that's a lot more attainable than what we were looking at with 20%.
Mm-hmm, yeah.
With house prices somewhere between usually $300,000 and $400,000, at least in our general area, then somebody who could come up with somewhere between $15,000 to $20,000 is a far cry from having to come up with $60,000.
It's make it or break it, right? I mean, like, go shop versus like, let's just give up.
Yeah, exactly.
Okay. Difference.
All right. So when it comes to steps in deciding which one, how would a person decide between different types of loan products?
That's another good question. So when it comes to FHA loans, there's a mortgage insurance that stays on it for the entire time that you stay in that loan, right? So that may be a deciding factor for a person versus whenever you look at a conventional loan, it still has mortgage insurance whenever you finance more than 80%. But once you hit that 80% mark, then you can have the mortgage insurance removed.
Oh, okay.
Another good thing that people want to know too is that you don't have to stay in a certain loan type the entire time you have the house, right? So
yeah.
You can refinance. You can start off as FHA, refinance later, and get into a conventional loan and get rid of the mortgage insurance that way.
Okay. Yeah. So a person who can currently come up with, let's say 3.5% down payment, they would be locked in with mortgage insurance for the entirety of the loan. But that loan doesn't have to be the entirety of the time they're paying off the house.
Correct. That's right.
Okay.
Yep. You can refinance and change from FHA to conventional.
All right. And if you're past the 80% loan amount, loan to value.
Right. Loan to value.
Then you can drop completely
the mortgage insurance. Get rid of it.
All right. Now, mortgage insurance, how much are we talking in mortgage insurance? Is it a large payment or a large addition to the payment?
So on an FHA loan, there are two mortgage insurances, I guess you would say. So there's an upfront cost that you have to pay. Okay. It's 1.75%. And then the monthly is 0.85% of the actual loan amount that you will take out.
Well, that's good to know.
Yeah.
So that will be how much a person will be looking at as far as adding on to their principal, interest.
With the upfront part of it, that's right.
Okay, would also be that.
Mm-hmm.
All right. Well, that's good to know. So now when it comes to the minimums, we understand what we have to come up with. But let's say someone needs help with that. What do you have available as far as down payment assistance?
Yeah, so another good question. So there are programs that are designed to be able to help people to come up with that minimum down payment that they have to have. So there are some things that you want to know about when it comes to those down payment assistance programs. One of them, the first thing that you want to know is that there are income limits on that. So you have to make below a certain amount to be able to qualify for down payment assistance. So in each county, each area is going to have their own minimum amount or maximum amount that you can make and still qualify for down payment assistance. So that's one thing you want to know. And then there's different types of down payment assistance that you can get. There are going to be grants. The nice thing about a grant, if you can qualify for a grant and still be approved, is that you don't have to pay the money back at all, right? So you do have to keep the house for at least, typically most lenders are going to say at least 7 payments. And then after that, you can choose to refinance, whatever you want to do. Okay. You don't have to worry about paying that grant money back. There are also second liens and bonds that are going to be different. So when it comes to let's talk about a second lien. That is going to be an additional lien on the property that typically will stay for 3 years. And that means that you got to stay in that house or keep that loan for 3 years. And then after that, whatever you want to do, refinance or whatever it is, you can do that. But during that 3-year period, if you choose to sell it, refinance it, whatever, then they can come back and ask for that money that they gave you up front back.
So when we talk about grants, that's money that typically, as you mentioned, depending on the county, you're looking at 7 payments.
Mm-hmm.
And once you're 7 payments in, you're free and clear to make other choices.
Exactly. Yep.
Now, you said that the second lien programs, that they will extend 3 years.
Right.
So now a 3-year term is applied to that money. And what can't you do in that 3 years?
So during the 3 years, again, you can't refinance it. So meaning you're not able to change the terms of the loan. You're not, if you sell the property, anything that changes in that financing during that 3-year period, then they're going to come back and you're going to have to pay the money back that you received.
Okay. All right. Well, that makes sense. That's their hedge against something changing. And so that's the second lien position that they put themselves in. Now, what's another product that somebody could use for down payment assistance?
So there are a few different ones. One, just for various state programs that are offered. There are county programs. So each county may have something, even down to like the city level, they may provide funding. So whatever city you're in, you want to check and just see what type of funding is or grants are available or down payment assistance that's available. Now, the amounts is something that people do want to know about too, like how much can I get, right? So the amount that you will receive typically will range between 3% to 5%. Some programs will give you even up to 7% toward the purchase of your home. So that's a huge number, right? When you think about the fact that the down payment, the minimum that we mentioned, was just 3.5%. Exactly. And now if you get 7% to help you, then that surpasses that 3.5%. So what can you do with that other money?
That's a really good question because realistically, a lot of people are looking at doing the math and they're realizing that, okay, so if these programs can cover, that's essentially a 0 down payment home.
Mm-hmm. Yeah, so it'll cover your down payment, but then
what do you do with any overages? Do they limit you to what you have as a down payment?
So you can, if you choose to put more money down, you can, or you can also apply the overage toward your closing costs. Gotcha. Yeah, so sometimes you'll hear people say like, hey, I was able to get into this house. I didn't have to put any money down at all. There was no closing costs. Well, that's how that happens. So they'll use the additional money, put it toward the closing costs, and that'll help to offset. Sometimes even zero them out to where they don't have to bring anything at all.
Wow. Okay. Yeah. Now, I know in the market that we're in right now, but this is currently February 2023. So just a caveat, if you're watching this later and don't say, well, Kendall, you said that the market right now in February 2023 has a lot of sellers actually bringing closing costs to the table. Mm-hmm. So if a person had that situation and they were to have this down payment assistance,
that's how you definitely get down to not having to bring anything.
So you could essentially cover more than the down payment, have the seller cover the closing costs, what else can you do with this money? Are you allowed to apply it toward the principal, or do you have rules?
So if there's an overage, then typically they will apply to the principal. But what typically happens, or what happens a lot, is that a person will pay earnest money whenever they sign a contract to get into it. So if you have down payment assistance coming in, the seller's giving you some money, and you have an overage, well, a lot of times that allows you to get your earnest money back.
So the cashier's check that people go to get, and that they hand over to the title company, that actually could come back to them?
Yep. So at closing, after you sign, the title company will write you a check, and you'll get your earnest money back. You'll walk out with the check to buy your home.
That's amazing. So we're looking at a program that not only would allow you to get into a house with zero down payment, but also would allow for all of the fees that are normally associated with that transaction to possibly be wiped away.
Yep, that's right. So down payment would be covered, closing costs covered, and possibly you walk out with a check.
Okay.
Yeah.
So if a person is looking to purchase a home and they see the podcast, they realize, wow, I could get into a house with no money down, and the wheels are turning.
Yeah.
What do they do? Do they have to be at the mercy of their local banker, or can they get online and do anything themselves to find these programs?
So, of course, you can always try to search on your own, but it's easier if you have somebody helping you, right?
Gotcha.
So a person like myself, or specifically myself, would love to be able to help with guiding you to know where to go to find the type of grants that would be good for you, or the type of second lien or whatever, and to help you to find those options and present them to you. So,
okay, so this takes us back to the mortgage mindset. So the reality is that getting with a mortgage professional is just as important, or if not more primarily important, than finding the home that you want to purchase.
Yeah, because you want somebody who knows all these programs that can guide you to them. Otherwise, you're going to be trying to Google and find them on your own, and it doesn't mean that that's going to be the best program to fit you into. So if you have someone who's knowledgeable that can get the programs for you, present the options, and help you to know which way to go, that's really going to be the best way.
Okay, so step one, contact Dekovan Wesley at the Mortgage Minds. But the reality is that contacting somebody like yourself is step one. And that kind of takes us full circle, because the mindset of thinking in terms of mortgages, not in terms of how much is this house, not in terms of what house is the prettiest or the most attractive, but how does the financing work? How can I get the money, give it to the people who currently own the house so I can own the house, and then over time, I can eat away at this?
Yeah. I mean, because it does change your mindset on, like, is this a real possibility for me? Can I get into this house? How much money do I need? And then is this house really an asset? Because if you're able to get into it, you have a very little amount that you have to put down to get into the house. That opens up a lot of opportunities, because you can use that money for other things, right? Maybe investments down the road, different things that you want to do with the house. So we're here to help you really take advantage of what those options are and lay them out so you can make an informed decision.
So for individuals who aren't able to save the standard 20%, there's lots of options.
It's still possible.
Okay.
There are options.
And then for those who are savers, then what are some things that you've seen people do with those overages, with that money that they now have because they save for a down payment they don't have to use?
Yeah, true. I mean, so of course, like, if you're buying a house that's already, existing home, not a brand new home, sometimes there's things that need to be done to the home, to bring it up to a livable situation that you feel comfortable with, that you like. Or maybe even there's ideas and changes that you can make into the house, adding additional space or what have you, that will bring added value to that home.
Okay. So I think that we've got a really well-rounded view of not just the different types of loan products that a person could use, but also ways to add on to that. Grants, second liens, and other programs that are offered by federal government, state government, city government,
Right.
that will help to cover those initial costs, down payment.
Yep, that's exactly right.
All right. I'm Kendall Williams. This is Dekovan Wesley for the Mortgage Mindset Podcast, and we will see you guys later.